Greetings, market rebels. Welcome to this week's sector situation, Sunday, December 3rd, 2023. And it's a little bit in front of 1 p.m. here on the East Coast. I'm Wayne, and I'm going to try to get us through this quickly because I'm just, again, having trouble with this, excuse me, persistent cold. Here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And here is this week's macro measure. I'll just leave that up for anyone that just wants to snapshot that or what have you. I'll take the second to just explain that I'm just trying to push us through this because I continue to get this coughing and it just won't let me go, and just made it hard to speak for an extended length of time. It really becomes tougher the longer I talk. So with that in mind, I'm going to now stop the share on this, get us back over to more of a chart situation here. Come on. And get us really on our grid of 12 on my main screen. And I'm not going to spend much time on this, but I just want to note, because I'll go through and later on we'll rattle off some of the sort of RSI readings that are of concern on these. But if you look at this, right, the argument that this has been narrow, Pete was talking about this on Cocktail Hour, and we talked about it a few weeks ago. It really did stop being narrow. Initially, the surge was led in a big way by certain things, but you were Mag 7, SMH, XLC, XLK, but then, they really came after things. We were talking about that a few weeks ago, that the next stage of this might be, do they have a higher low? And we had some arrows pointing to those, thinking it could be, and it turned out that it was, right? So they did get a massive participation. And as I covered in macro measure, they, got massive participation this week on Friday, at least out of the IWM. The diamonds were surging late the latter half of the week as well, which were not really performing as well as SPY and QQQ, and they still aren't, but they did surge, overall, and it was a dramatic move. So right now, someone like me who likes to look at things like transports and financials, they've done very well, and so there's just no denying that even things that are sort of head scratchers to me, like XLRE, like real estate roaring back. I think this is really more of a function of market, like the overall market environment, and also conditions in terms of poor positioning and so on and so forth. But you can't act as though they aren't coming back. They've got discretionary on the verge of breaking out in XLY. Industrials screamed. Basic materials have started to scream. We've seen UOA in a lot of these, and we're fortunate enough to get ideas into our log for folks. So hopefully folks had a good week on some of these things that really, like XLI, that perked up in the form of Boeing, for example, and other things. But XLC and XLK have been resting. And that's maybe why when I said this in macro measure, the Qs to me look the best of all four major index ETFs in terms of the RSI status, where if they are going to try to run this market again, they could go right back to big tech and start all over, and they really wouldn't be in an overbought situation, which, that's their go-to. So I'm not predicting that for this week. I'm honestly looking more at vulnerability. I really think that a pullback is due, and I'll just flash that this is really something that's relatively rare reading. You've got to go back about 5 years to find one in excess of this in terms of the diamonds RSI reading. So that just shows you how fast you've come, relentlessly, the nature of it, the whole thing. So it is what it is. And that doesn't mean it instantly has to go down. But to me, especially with this news impacting this morning, Red Sea situation that was confirmed by the Pentagon, again, to me, a very dubious situation and distressing, depressing, but beyond our control, unfortunately. Regardless, that you would think has an impact. If there's a reason maybe to panic and sell and take profits, maybe this is it. Maybe, I don't know. We'll see how it gets spun by the time the market opens. But maybe that had to do with the oil sector firming up, with something we noted that was happening a little bit sort of last week, and then during this week, it started to look a little bit better, and at least it wasn't going down the way that it had been, sort of channeling its way lower, is kind of going sideways, which is you'll take, right, if you're a bull. And a lot of people have been bulls here, and so that might be the start of something. But just throwing, just to give you an idea, that's really right in the middle on RSI at 48 right now, which is about where you would expect it to be, right, given what it's done. So could it start to emerge from this? If it's only due to that sort of geopolitical, well, it doesn't really matter in terms of if you're long or short oil. If it matters, it matters. Like, the reason is whatever it is. But in terms of, does that create sort of like a long-term situation where there's more staying power for a rally? That's the big question. We're real early into whatever having happened, and what follows from that, I don't know. But just a thought to share, that has corrected, was a pretty deep correction. And I think if you really want to feel like you're starting to get all clear, the 50 is going to be your first sign of it there in gold, and that is near 86.82, and then the 100 is just above there at 87, let's call it, and a half. So you get through there, you're pretty much worked your way out of the channel, you're above all the SMAs, and you base for a while. So maybe they put a little more together. So I think that's the levels you're going to be looking at. But that's the RSI. It's kind of fair in there. If I start looking at some others, what I'm going to do is pull up some other sector RSIs hopefully for everybody to work with. Just maybe save you a little time, just give you a sense of what my charts are saying, right? And so I think let's start out with XLK. Not something you trade, but it just correlates well. But you can see why this RSI it's overbought, right? But it's not as bad as you would think. So if you look at the daily, it's on 73, roughly speaking, and that's because it just really had such a dramatic move, right? And we're still getting part of the calculations going back to when this thing really was moving up strongly. But if you look at something more like a 2 hour, for example, it's only at 58, right? So if they wanted to do something here and break out from this consolidation, not predicting that, but the point I'm trying to make is it wouldn't be that crazy to try to keep going again, right? Because they really have backed it off from that really short-term overbought, very high readings, even though it is still a little high on the daily. But it's backed off. It's sideways, if you will, enough to allow, in my book, for it to try to move higher. But remember, this news probably, I would assume this news probably is a little bit of at least a negative initial reaction. That's usually the case, but we'll see. I don't know what's going on right now. I don't really know the extent of it. XLC, right, that's corrected even more. And so the daily RSI is in the high 50s. Meanwhile, right, the 1 hour or something like the 2 hour, they're right near 50. So that could do something as well. Another one that could do something. But look, if there's more pressure, I think you have to look at flat lines, and then where you come down to here in gold here on the 50 would be 67.50. So that's not a big mover, but that does have some of your bigger stocks in it, like Meta. I believe these are all part of this, Meta and Google. And you could see we were talking about how the Mag 7 and some sectors were looking vulnerable, and that they could start to give up more. And some of them did, not all of them, but some of them did, actually. So that was part of what we talked about last week in macro measure. And I think maybe a little bit in here too. And so they still look like they could be a little pressured, right? So that wouldn't be crazy. Now, let's see, getting back to the sectors though, XLF, like this is one we have to mention. We have to mention this because if you look at this kind of a reading, right, the kind of move that this thing made, and for some reason it doesn't like the way oh, that's my keyboard actually. Sorry about that. But look, this is at a 76 reading on the 2 hour RSI, and it's 79 on the 4 hour, right? And 78 on the daily. So, nearly 79 on the daily, excuse me. So that's extreme, right? I'm not saying it can't go higher. I don't want to have people think you just start shorting, but my point is, right, the easy money's been made here on the long side at this point, right? You've been going up you went up for a month straight practically. So just keep that in mind. That's where you are. the probabilities in my mind, they favor at least a little bit of a pullback. Maybe you come back into these former highs, and you play around near support down in here near that 10-day. That's the kind of thing when it gets this extreme. And this might be a good excuse for people to take those profits, like I said. So XLRE, we should look at this one because, it's actually been a decent, this and housing have been decent traders, in both directions at times. This has more room to go if it wants. You can see like the air pocket above. There's not a lot in its way, I don't think, to move up a little bit more. I do mean a little bit more. But look, in the reality, that it's got a 75 reading on the RSI on the daily right now. So yeah, can you get higher? Of course, we say it every time, but you're just looking at probabilities. And if you get in on the long side, just be smart. Know you're not early in the move, more than likely. If you get in on the short side, know that you're fighting the trend, and just because it's overbought doesn't mean it has to go down in a big way. But sure, I do think it should, maybe a lot of these things I think should take a breather. You have to, I could say all this though, but I still would insist that you at least glimpse at the dollar and glimpse at yields, because there's been a very strong inverse relationship and with those, for the last nearly 2 years. You can see that this XLV is really on the verge. We had this line in there. We didn't update it, I guess, last week, and I can extend it now. And you can see where it comes out to, right? And you're really just barely, this is it. I mean, you don't get lines that are more, maybe more perfectly fit, right? In terms of where we can extend this to. I probably should just bring this to right about there on top of it. It's almost like a perfect line from where we had it. And you can see that's trying to break through. That's trying to break through that resistance break and all the SMAs that were nearby in short order, right? So they suddenly came after healthcare. And this is why it pays, I think, to look at these other sectors that are laggards, because after they've chased certain things up, they start looking for these other things they can start plowing into that haven't ran as far, right? And that's how things sort of spread out, broaden out, and you can catch these laggard plays. And I think some of our traders did in the service of some rebels, caught some really good laggard plays in different things this week, which is nice. I put something in for DocU in Rebel Pip, but I didn't see anyone trade it, unfortunately. But that's got earnings coming up. But it was kind of like a short-term sneaking in front of earnings thing that I thought looked interesting just technically and hadn't ran, and kind of gave me that laggard kind of look, kind of like an inverted, kind of very subtle kind of inverted compound head and shoulders, and it just popped on Friday. But yeah, you had to do it more of a short-term trade, I think, but it was just lagging so far behind with a nice pattern, and the short-term SMAs were starting to, improve and things like that. So it just had a lot of little qualities to me that made it an interesting watch on later in last week. XLP, this one, right, you can see right near the 100-day right now. This is 70 on the 1 hour, roughly speaking. So, again, not extreme, definitely has more room to get to the 200, I think. But do you need to back up a little bit? Do you need to come back into the 20 first and kind of back and fill a little bit more than you really have in this market of late? XLY, let's take a look at the discretionary spending. That looks, poised to break out, right? I didn't even realize there was a trend line about to appear too. But if we extend that trend line, that is also really right there, right? So that, to me, again, if you have initially bad news and they work its way through there, not really like a super, I'm not calling for some super break, but that's a good sign, right? As much of a bear as I am, economically speaking, you have to say, like, as far as market activity, market behavior, right? To see these discretionary stocks start to do better would be a good sign, really good sign. So I think that looks pretty good. 68 though on the daily RSI right now. So 60 looks like 68 on 68 on the 2 hour as well. So that is you have to be a little concerned about the short term again, especially with this, if this Red Sea news is the real deal and they decide they're going to use that as a excuse to take profits finally and kind of bring things back down. Transports, again, with not a lot for me to complain about from a technical perspective, because the transports, the discretionary, the financials, these are all coming back strongly. Now, you have to wonder, is this really just all they're talking themselves into another great thing like they always do, and you're really not going to get the soft landing? Legitimate question, but as of right now, if you're just kind of keeping score, you have to like what you see as a technician. I think that, look, they're really having, the only problem you have now is you maybe improve too much too fast, um, in my book. I mean, otherwise you really can't really say a lot of negative things about how the technicals have behaved. Okay, so I think XTN, at this point with XTN, it's got a 77 reading on the 2 hour on the RSI, and it's at 70 on the daily. So after that kind of a big move, right, you can't really be shocked at this point if they use a news story to pull this thing back a little bit. But then look, if it takes this out, if it holds this short-term trend and manages to take this out and go, what's really in its way, right? It's just more flat lines, and fibs will be waiting for it and things like that. But there's really no SMAs to keep it tamped down, or big patterns that are in the way. It itself has sort of an inverted head and shoulders. So the other thing you have to think about too, if you're me and you're an economic bear still, and you don't see that you don't see these wonderful green shoots in the aggregate, the way that they're all these wonderful things they talk about, is that not only could you be wrong, but there could be things coming down the pike that you're not aware of, but that naturally Wall Street is, right? So you always have to be careful about being too, I think, about being too, if you're trading in the short term, especially, right, you can't be too dig your heels in-ish. I think you got to be, just avoid that, because it can really hurt you, and it can be very painful over the course of time as moves compound, so that you maybe miss out on or fight, even worse, fight. So just be careful. Now, daily RSI reading here in basic materials is 75. You can really see that there's not a lot in the way now for this to try to come back towards the highs. And that's what I'm basically saying is probably the most likely scenario for this market, is that you do back off a little bit, and then you probably try to regroup, and you probably try to take the Fed doing nothing as a good sign in mid deck, and then you rally towards the end of the year like they typically do, and then they rally into the early part of 24 as well. That's what normally happens. That's what the analog and the historical precedent, right, or the empirical stuff calls for. But it's not like it's a guarantee or a lock. It's just that that's what it calls for, right? That's probably most likely. So right now, to me, this is one of those ones where, look, it's gone a little haywire to the upside. A little bit of a pullback makes a lot of sense. And then maybe you try to go again. But just like I'm saying that the Qs and the SPYs, the real new targets for those are all-time highs, and then the 50% fib extension from there puts you sort of, from here, puts you out there on those. That's where this is destined to go. This is really, if that were to happen, you would expect this to get pulled along and attack those highs, right, that are here, that are all, I think those are your all-time highs. Oh, I'm wrong. My bad. So this was actually doing better back in here. My bad. I thought that was the high. I must be thinking of a different sector that I looked at earlier. But so anyway, my bad on that. So yeah, we still have ways to go there. So scratch that, strike that, reverse it. It's what happens when you get confused. Probably too many pharmaceuticals at this point that I'm taking. Anyway, XLI. Let's see here. 76 on your daily. I mean, it's another one with room. You can't really say it doesn't have room. It sure does, and it's above all your SMAs. Shorties are rising, but you've got the heavy duty RSI readings. You've got a 79 on the 4 hour. You're up there. So again, I don't think anybody would be shocked if we do get a little bit of a pullback here on on this news. Now, utilities can be seen as a defensive sector, but all you have to really do is go and look at what yields have been doing since the end of October, and I'm sorry, since the start of October. So yields really topped out, and this thing was started to improve a little bit. But as yields continue to fall, and dollar continued to fall. This just continued. These just continue to move up, right? So these are doing well now. They're not a trader for us, but that's just another proof in the pudding that sectors are working. We were looking at things like XHB and saying like it's a little out of control, right? Like how does this happen? But again, this is why I would say, like, even though you may be right that there's problems in home builder land because this just isn't sustainable. Could be right, and there's a lot of stuff I've seen the last couple of days that say that things are way worse than typically is reported. But why not, why either at least not lose, or even better, maybe try to win? So we are willing to take those ideas and work with them when we see paper and we see the trends change. Just take what's there and say, look, this is what who's in control right now. This is what they're trying to do. But definitely overbought. You're at 80 on your 2 hour. So another one that's due. But as of right now, just keep in mind that with all these things, what they've been able to do is they have an incoming uptrend. They started last October. They took that uptrend and corrected it from really the end of July all the way through nearly October. And then they were now they're on the verge of, they broke out of consolidations of those corrections, and now they're moving things up as if there's a new trend unfolding. Excuse me.